I thank ICI Jaipur branch for inviting me here today to moderate the session on pre-package insolvency resolution process, in short PIRP, to be chaired by Shri Anil Goel sir. I thank Shri Anil Goel sir, who has graciously accepted the invitation to be the speaker today on PIRP. Goel sir is one of the most experienced IP in the country, having concluded 15 assignments in his name and presently acting as a liquidator in 10 companies. Some of the known names are REI Agro Limited, Rotomac Group of Companies, LML Limited, Amrapali Group, Lanco Group of Companies, Nirav Modi Group of Companies, Visa Power, Varsana Ispat, etc., either in his name or in the name of his partners. Goel sir is the founder of AAA Insolvency Professional LLP, the largest insolvency professional entity in the country, having handled more than 190 assignments as IRP, RP, liquidator collectively, having the largest number of 32 designated partners and 12 associated partners, having a human resource of 300 plus members, working full-time for insolvency and SARFAESI practice, having established offices and sitting partners at New Delhi, Mumbai, Kolkata, Bangalore, Hyderabad, Raipur, Ahmedabad, Chennai, Kochi, Bhubaneswar, Ludhiana, Kanpur, Pune, and Jaipur. Goel sir is also the founder and chairman of AAA Capital Services Private Limited, a company engaged in the profession of resolution and enforcement agents under SARFAESI Act, having operations across 20 states in the country. He is also non-executive chairman of AAA Valuation Professional LLP, an IBPI recognized registered valuer entity for all asset classes. The valuation firm is having 13 partners and is doing many large assignments. He is also a senior partner of AAAG and Company LLP Chartered Accountants. I would also thank CA Shri Prakash Sharma sir, our respected Central Council member hailing from Jaipur, presently Vice Chairman of the Committee on Insolvency and Bankruptcy Code ICAI, for agreeing to join us today as a special guest. I thank CA Akash Badgoti, current Chairman, and C. Ankit Maheshwari, current Secretary of ICAI Jaipur branch, for agreeing to be present among us today for the session. Before I pass on the baton to Anil Goel sir to take up the session, I would request CA Shri Prakash Sharma sir to impart his words of wisdom on IBC as a whole and PIRP in particular, which is said to be a breath of fresh air for MSMEs grappling with huge debts, being operationally profitable, but otherwise running into losses due to huge interest burden. All over to you, Prakash sir.
सर आप म्यूट है प्रकाश सर आप म्यूट है
Respected Chairman of Jaipur branch Akash Bargotia ji, Secretary of branch Ankit ji, other executive members, today's moderator Abhishek Mishra, and today's speaker Anil Goel ji, and my friends, I welcome you all in this very important session of insolvency. Firstly, I will be failing my duties if I don't place my sincere regards to Anil Goel ji, who is one of the best IP professional in our country, who has agreed to share his views, share his knowledge for we professionals in Jaipur. Friends, I was the first chairman of Insolvency Committee of our institute 2 years back, and I have played an important role starting this committee. And from the day this act has been applicable, it is very dear to my heart, and it is one of the core area where my firm also works in this particular area. If you know, friends, in last so many years, I have tried to organize so many seminars and conferences. In all my India level seminar or conferences, there was always one topic on insolvency. So you can understand the importance of this Insolvency Act. And particularly, if you see in last just 6 months, on 13th August, our PM Saab declared that in income tax, there will be now faceless assessment. In this February, we saw in the budget that so many certification from GST has been abolished. And in the tax audit, the limit has been increased to 10 crores. Not even that. In the last week of March, we received one of the circular from the government for the all companies who are keeping different accounting software. So we have to keep track of those software also, whatever changes they do in a year. Although that matter has been postponed for a year, but it is going to be implemented as soon as possible. So friends, if you see these circumstances, I feel that artificial intelligence and data analytics are going to play a big role in our traditional lines. Yes, but there are some other lines, and particularly Insolvency Act, which has come out with two important new areas, that's insolvency professional and valuation. Both the fields are very, very important for we professionals. And I'm happy to share with you that presently 62% insolvency professionals are chartered accountants. So till now, we are having our very good strength. And I expect in future also, we will increase our this percentage. And this is very important area. So we will be doing wonderful work in this particular new area. Friends, even our government, India has come out in a very good position in the world in ease of doing business after implementation of this Insolvency Act. And we are waiting for a very important government's declaration that the moment this act will be applicable on individual and on partnership forms, there will be a very big, huge work. And presently, whatever is the strength of our insolvency professionals, that will be very, very less to handle those cases. It was supposed to start in last year only, but due to COVID conditions, it could not be started. It could not be started for this thing. But I hope the moment government will allow this after this COVID problems, there will be a very, very big scope in this particular line. Friends, we are organizing very soon. The moment this will be come out with this COVID problem, all members of our CLT and CLATs, they have agreed to be in Jaipur physically, and that will be a very good seminar. In that, we'll have interaction with those members and insolvency professionals face to face regarding so many of our confusions and matters how we should deal in this particular lines. In publication side also, friends, at our institute level, we are coming out with lots of new publications, and particularly we publish every month one journal. In that we come out with all the important decision which has been taken place in one particular month, and whatever important laws, any other circulars, they are coming. We are publishing those things in this publication. Presently, lots of work in that publication is done by the group which is settled in Jaipur. Rajneesh Singhviji is one of the group leader in that. But now we are coming out with another group in which we'll be sharing with the members that there are so many important questions which our clients ask from us regarding this act, and we don't know that. For that, we are making another group, and Abhishek Mishraji will be the in charge of that group, will be the convener of that group, and all those members who wants to participate in this particular group, they are most welcome. They can send their names to Chairman Jaipur branch, Akashji. They will add their name in that group. Sir, another information I would like to share with you that within 2 months in Center of Excellence, we are going to have a e-library. It will be one of the biggest and best library of the world. And in that library, particularly three topics will be very important, for which all information will be there in that library. That will be income tax, GST, and Insolvency Act. So within 2 to 3 months, you will see we'll be having an e-library in Center of Excellence, and it can be operated from sitting in your residence or in your from office. That will be available to all our members at free of cost. And all information, all kind of books, all information will be available from that library. So Jaipur branch is going to play a big role even in insolvency field also. That is very, very important. Lastly, but not the least, regarding these friends, for passing out this course, it is not that simple that you are sitting in the house and went to the exam and you clear this exam. You have to study reasonably 15 to 20 days, at least you require to study this course for passing this course. So on 22nd, 23rd, 24th of May, we are having some crash course for all those members who are interested to pass this exam. So all those members who are preparing for those exams, they are most welcome to attend that session. I will not take much of the time. Again, my sincere regards to Anil Goelji for giving us such a valuable time for sharing his important information. Thank you. Thanks a lot, Abhishek.
Thank you so much, Prakash sir. You always end up imparting some words of wisdom and some positive thoughts among all the audience. Now, I would also request my friend Akash to speak a few words before I pass on the baton to Anil Goel sir.
Thank you, Prakash sir, and thank you, Abhishek ji. And first of all, I would like to pay my sincere gratitude to Sri Anil Goel ji, who has accepted our invitation, and जयपुर ब्रांच के सभी मेंबर्स को इंसॉल्वेंसी प्रोफेशंस के लिए क्या क्या गाइडेंस की जरूरत है, किस तरीके से इंसॉल्वेंसी अभी काम कर रहा है आईपी, उसके लिए करने के लिए सिंसियरली थैंक यू बोलना चाहूंगा अनिल गोयल जी को. एंड एज प्रकाश सर ने ऑलरेडी बोल चुके हैं, हम 22nd, 23rd एंड 24th को हाउ टू प्रिपेयर फॉर एन इंसॉल्वेंसी कोर्स, इस 3 days का हम एक रिफ्रेशर कोर्स लेके आ रहे हैं. And so for all those members who are interested, please kindly get registered themselves. उसकी जो fees है वो that is 700 plus GST. So I request all the members to kindly register themselves. I think कल morning में branch से message आ जाएंगे for the registration link. So I request and this course is not only for Jaipur members, it's for entire India. So anyone जो भी पूरे इंडिया में जहाँ भी जो भी इंटरेस्टेड है इस कोर्स में एक्सेप्ट करने के लिए, दे आर मोस्ट वेलकम. एंड अगेन मैं इस इनिशिएटिव के लिए प्रकाश सर को थैंक यू बोलना चाहूंगा, बिकॉज ही इज ओनली द पर्सन जो हमको नई नई फील्ड्स के लिए हमको नॉलेज देते रहते हैं. And ये प्रकाश सर का is one of the initiative which we have came up with this refresher course. And that's it. And thank you Anil sir for accepting our invitation. Thank you.
Thank you so much for informing all the members that there is a crash course happening, because last month I was reading the IBBI journal. In that, the average attempt to pass an insolvency exam was 7, vis-a-vis 6 attempts taken by people to pass the valuation exam. So I believe it is becoming difficult. It always was a difficult exam, and it is becoming difficult. And you very aptly said for Prakash sir, I became an insolvency professional also based on the advice of Prakash sir, and the books also were given to me by him. So he gave me a couple of books and asked me to prepare for it, and I could pass it in my first attempt. So before I pass on the baton to Anil Goel sir, let me just take you through the brief of an MSME enterprise. What is an MSME enterprise? What is in store for MSME enterprise under PIRP? So MSME enterprises are crucial for why did the government think of PIRP? Because MSME enterprises are critical for India's economy, as they contribute significantly to its GDP and provide employment to a sizable population. Therefore, during the pandemic times, it was considered expedient to provide an efficient alternative of IRP for entities that are classified as MSME enterprises, ensuring quicker, cost-effective, value-maximizing outcomes for all the stakeholders in a manner which is least disruptive to the continuity of their businesses and which preserves jobs. So in order to achieve these objectives, it was considered expedient to introduce PIRP for MSMEs, that is the corporate persons classified as micro, small and medium enterprise as per MSME Act 2006 as amended in July 2020. So micro enterprise is the one that has an investment of up to 1 crore rupees in plant and machinery. That can be the depreciated value standing as on date also, and turnover not exceeding 5 crore rupees. A small enterprise is the one that has an investment of up to 10 crore rupees in plant and machinery and turnover not exceeding 50 crore rupees. A medium enterprise is the one that has an investment of not exceeding 50 crore rupees in plant and machinery and turnover not exceeding 250 crore rupees. So now, without taking much of your time, I would request Shri Anil Goel sir to take over from here and take you through the provisions of PIRP process for the MSME sector. All over to you, sir.
Thank you very much, Abhishek. Thanks a lot for the introduction and for even for my introduction to Jaipur branch. That was also done by you. My greetings to CA Prakash Sharma ji, our Central Council member. My greetings to CA Akash Bargotia ji, our chairman for Jaipur branch, and our secretary, Mr. Ankit Maheshwari, in his, I think, absentia. I don't think that he is available today. The effort of this Jaipur branch is very, very timely. As CA Prakash Sharma ji has already said, that the opportunities for chartered accountants are immense in this PIRP structure. Also, he indicated that the traditional practice is coming down. There is a change in the kind of rules. The government is reducing the role of chartered accountants, making it more independent entrepreneurs. So the traditional practice, income tax practice, and GST practice is reducing. So even before this webinar starts, in fact, we were discussing with Mr. Prakash Sharma and Mr. Akash Bargotia that all the chartered accountants must look for alternative opportunities which are better. Of course, it requires a little bit of extra efforts, but these opportunities are better paying and it's got better respect. For example, when we start with the insolvency examination, passing of an insolvency examination and becoming an insolvency professional, even if you are very busy, but then still, I think when this individual insolvency or the partnership insolvency will start, this will become almost a household subject. Individual insolvency would be very, very important for a country like India. It will become a household subject. So anyone who actually would like to survive in future, even in audit, even in taxation, because for everything, insolvency provisions would be kept in consideration, even for auditing, even for verification, even for income tax. Everywhere this insolvency provisions would be applicable. So insolvency law, even if you are not interested in becoming insolvency professional, the knowledge of this law would be very, very important. The valuation, as he said, this is a large opportunity of valuation. The other opportunities, like we are doing it in SURFACE. We are the largest in India for SURFACE as enforcement agents or as resolution agents. You probably would not believe that the banks have so far given us more than 25,000 cases of SURFACE. So this is the kind of volume that we have handled. So it only needs we started in 2002 when the SURFACE Act was launched. Similarly, there are many people, they are doing this verification of loan proposals. They are also doing the kind of ASM practice where the banks have it. There is a proposal from Ministry of Finance that they would like to appoint agencies for specialized monitoring. So any company which is having more than 250 crores of debt, the RBI has suggested the banks that they can appoint an agency for specialized monitoring of these accounts. That is also a new area of work, and you can definitely empanel yourself with the IBA. Similarly, the IBA is doing the empanelments for the forensic audit. This forensic audit actually is going to, the business is going to increase many-fold because of this PIRP. Because in PIRP, there is a possibility that the banks would stipulate, the banks may stipulate that before we accept your PIRP proposal in principle, you might have to get your thing for forensic audit. That is also a kind of in pipeline. The banks may come up with their own internal guidelines. They would stipulate that anyone who is interested in PIRP would have to go through the forensic audit as appointed by the banks. So, so various new areas. So now today we are only going to discuss this PIRP. what are the provisions of the PIRP. I would not go into detailed section-wise and clause-wise discussions. I would only give you the perspective. What exactly is the PIRP? How it is beneficial to all the practicing chartered accountants? How it is beneficial to MSME? What benefits can be drawn out of it? And what are the precautions taken when we are actually trying to suggest somebody that he should go for PIRP? So all this is the discussions today. The format should be like as Abhishek Mishra is doing this moderation, and he would look into the questions, and every 30 minutes we should take some questions so that it become interactive. Otherwise, if I continue speaking for 2 hours and then there are people, they would probably lose concentration. So every 30 minutes, we will open this question answer session. And I would request all of you that you please ask questions. But the only request is that in case I have dealt with that particular subject, that question should be asked in that particular session, question answer session, and the subsequent questions after the subsequent session is concluded. So Abhishek, please keep a track. Like every 30 minutes we will open. Please remind me that there are questions, and those questions should be taken every 30 minutes so that everyone is trying to understand the question, trying to listen to the answers, and also put in kind of follow-on questions if there is any. Sure. So with this, I would need permission to share my screen. I think it is already there. So I would share my screen with all of you, gentlemen. So I hope my screen is visible.
Yes, sir, it is visible.
So this, when we are saying this pre-packaged insolvency resolution process, in short, we will only say today PIRP. Everyone knows that corporate insolvency resolution process was used to call in short as CIRP. So this we will call as PIRP. So this PIRP, and then we say this corporate debtors, we would say in today's conversation MSME corporate debtors. Because this PIRP is only applicable to MSME and it is also applicable only to the corporate debtors, that means private limited companies, and LLPs. So therefore, we will actually use this MSME corporate debtor, one word, and the PIRP is the other word. That means the PIRP is the name of the process. So today we would be discussing this part. The major difference that we are going to, first of all, I think the perspective of everyone should start from the salient features. And most of the salient features would be in comparison to CIRP. So when we say this PIRP, and on the other hand, we will also say CIRP and PIRP, a little bit of comparison in every kind of provisions that I would continue to have, because many of us already have some understanding of CIRP and they would like to develop an understanding with PIRP and also in comparison to CIRP. Now this PIRP is only for MSME industry, it is not for other industries. However, the definition of MSME has already been enlarged. Abhishek Mishra has already given you a complete update on the latest threshold limits of MSME industry, 50 crores of investment in plant and machinery, and that too based on the WDV of income tax, 250 crores of turnover, that too excluding export turnover. So these two conditions, in case any company is fulfilling, that means it is a MSME. However, the MSME is not applicable. MSME status is not applicable to the entirely trading organizations. It is applicable to companies which are providing services or engaged in any kind of manufacturing or processing industry. See, when the CIRP starts, the IRP is appointed and IRP takes the control, and the board of directors are suspended, their powers are suspended. In PIRP, there is nothing like this. The board of directors continues to run the company, continues to control everything in the company, and the resolution professional gets appointed to conduct the process. However, three particular functions are not the responsibility of RP. One, taking control and custody of business and assets of the corporate debtor. That is not required in MSME corporate debtor for PIRP. Second, protection and preservation of assets of the corporate debtor. That is also not the responsibility of the RP in PIRP cases. Third, responsibility to keep the company as a going concern. That also doesn't fall on RP. That responsibility continues to be with the board of directors. Board of directors are not suspended, their powers are not suspended. However, there is a process of monitoring and limiting their powers. Process of monitoring and limiting their powers, that is already provided in the PIRP structure, that the COC can pass a resolution in the very first meeting that the board of directors would not have following powers. For example, and this for example is basically out of my experience, my own perception, what exactly the COC would be doing in future. The COC would say that the board of directors would not purchase any fixed asset, would not sell any fixed assets, would not repay any loan, would not do any transaction beyond a threshold limit, monetary limit. So these are some of the resolutions which the COC will pass so that the activities of the board of directors are monitored and restricted. Similarly, the RP would be directed to develop some kind of information system, maybe fund flow, maybe profitability, maybe movement of goods. All that can be monitored by the RP with the COC. COC can also say that the security agency, which is keeping the guard on the material gate and the human resources gate of the company, that should also be appointed by the RP. However, the expenditures would be, of course, met by the company only. So these are the three powers that is not with the presently three responsibilities are not with the RP in the case of PIRP, and the process PIRP is not coercive. Now, what I mean to say coercive, in CIRP, any operational creditors, any financial creditor can file an application and the company can be taken over by RP after the NCLT order. So that means it's coercive. The board of directors, key managerial personnel are not interested in the CIRP. However, by order of the court, the IRP would be appointed and the entire business would be taken over by the IRP without any consent or willingness from the board of directors or the KMPs. In this case, PIRP, in the case of PIRP, it is a consensual. It's a consensual and judicial model. There are other consensual models in the country. I would come to that later. But in this manner, in this particular case, it's a consensual. Consensual means the financial creditors and board of directors, they collectively think that yes, the company needs PIRP, company needs restructuring, company needs some kind of relief from kind of over leveraged or kind of natural calamities or any other kind of scenario, and the PIRP can be started. This process of PIRP is much quicker. It is only 120 days, including the 30 days which will be given to the NCLT for approval of a resolution plan. However, this 120 days is only post PIRP starts. So there are two periods, pre-PIRP and post-PIRP. The pre-PIRP is 90 days and the post is 120 days. So even if we take about 1 month period, which will be taken by NCLT for approval of an application for passing an order of PIRP. So the total process time goes up to 240 days. And believe me, there is no provision for extension and there is no provision for exclusion. As far as extension is concerned, the COC doesn't have any power to ask for extension. And as far as exclusion is concerned, I think that depends upon the judiciary. In case the process was restricted, process was halted, process was then that particular period can be excluded. This was very well explained by Justice Mukhopadhyay in one of the meeting. He was saying that normally we all know that this football match is for 90 minutes. And at the end of 90 minutes, we see normally that the football match is extended by 1 minute, 3 minutes, 7 minutes, 9 minutes. So what is that extension? That extension is when, because of any circumstances, the players were not able to play for that period. So that is the extension. So that extension probably would be applicable to this structure also, because in case the players are not able to play for a particular period, that would be excluded. That is what we understand from the judicial pronouncements so far. PIRP is cost effective. When I say cost effective as compared to CIRP, it is much cost effective because it is the completely time bound. Secondly, the cost is not supposed to be borne by the committee of creditors. The cost is supposed to be borne by the MSME corporate debtor. The corporate debtor, the RP and the COC will provide an estimate to MSME corporate debtor, and the MSME corporate debtor would be depositing that kind of amount which is required for RP fee, professionals fee, and other expenditure in an escrow account which will be operated by RP. So the RP's independence is completely controlled. RP's independence is completely intact, even if he is taking the money from the corporate debtor, but then he is not asking for his payment from the corporate debtor. He is asking for his payment from the committee of creditors and not from the corporate debtor, but the money is being provided by the corporate debtor. So in that scenario, with whatever we are feeling so far in the case of CIRP, that the RPs are not getting payment from COC, neither they are getting from the corporate debtor, nor there is any fund available in the corporate debtor's account. Therefore, the RPs are not getting paid. So in this case, the RP's payment is assured. If the RP's payment is not there, the resolution plan, the COC would say that, okay, we are not approving the resolution plan. The business normally in the case of CIRP is disruption. When the RP comes and there is a resistance from the promoters, the board of directors and the KMPs, because of that resistance, because of the coercive movements, because of the applications under section 19(2), because of the fraud applications, the information from the board of directors is not flowing into the RP. Neither information nor fund flow, nor kind of revival ways and means, nor the actual technical and economic information so that the restructuring proposal is prepared, neither the perfect valuation of the assets. Because the valuation depends on the information, the valuation depends on the inspections of the books of account and the material lying at that place, and also the purchase price, also the technical information from the board of directors, from the promoters, from the KMPs. So the valuation also during CIRP is not very clear, not very correct. Whereas in the case of PIRP, the information has to be given before PIRP starts. All the information will have to be provided by the board of directors to financial creditors before even the PIRP starts. Therefore, there will not be any lapse on the information. So information would be there. The business would be continued. It will not be disrupted. The board of directors will continue to run the business. Customers would not even come to know. Then there is a possibility that the employees and the workmen also will not come to know. There is no provision for publication of this commencement of PIRP in the newspaper. So PIRP would be considered as a restructuring proposal, which is normally pending with the banks for most of the MSME corporate debtors. It can be a proposal for restructuring. It can be a proposal for one-time settlement. So all that is not disruptive in PIRP. It continues, the business continues, the employee continues, the customer continues, everything continues. There is no restriction on anything, except that monitoring and except that some of the things which the board of directors would like to do, they will have to come to the committee of creditors for permission. So therefore, the valuation of the company also maximizes. So it assures the continuity of the contribution to the GDP of the country. It assures the continuity and preservation of jobs. As in case the PIRP fails, the company doesn't go to liquidation. The company just continue to run the way it was running. So there is no provision. There is only one provision that I will explain later on in what circumstances the company can go to liquidation. However, in case no resolution plan is approved, the PIRP gets terminated and the company continues to run as it was running. So these basic features are very important, so that I explained the basic features of PIRP and the application. Now, the PIRP would be applied mostly to any kind of restructuring. In the next slide, I will try to explain in what cases the PIRP would be most beneficial. Only I would a little bit of I just feel like that this government actually has done a wonderful job in this case. The implementation of PIRP has been done on a lightning speed. In fact, the government was working much before it, when this in June 2020, when the MSME threshold limits was increased. I think the planning started at that time. And on 4th of April 2021, the ordinance was promulgated. And on 9th April 2021, the rules were notified, the regulations were notified, and also a notification that the default limit in this case would be 10 lakhs and not 1 crore. So this is the minimum default limit. However, there is no maximum default limit. The code, IBC code, has inserted a new chapter that is named as chapter 3A, 3 capital A. That is the new chapter, which is a chapter for PIRP. And the new sections have been introduced. The entire PIRP is into one section, which is like 54 is the first name, and then from A to P. So 54A, 54B, 54C, and up to 54P, these are the entire PIRP sections. And the two new sections have been inserted in the code. One is 67A, which is for penalty, and one is 77A, which is for prosecution. So this is the kind of changes in the IBC code. Okay, let us understand what is the existing structure of, now we are only focusing on the restructuring, one-time settlement, and we are not talking about the liquidation today. We are only talking about the restructuring and revival and removing the financial stress of any company. So when today a PIRP, it is for MSME. So whatever schemes I am comparing today, that also is applicable to MSME. So the CIRP is applicable to MSME, and we all have already seen what are the pros and cons of CIRP. There is no need to repeat it. However, in very short, CIRP is expensive, it is disruptive, it is coercive, it is time-taking, it is litigation, it is the kind of resistance from the board of directors and the key managerial personnel. The value diminishes. Most of the companies are actually liable to close only because the funds are not available. COC has not provided the funds. The business could not be continued. The RP was not able to raise funds, interim finance. So all this is basically CIRP, and that too, whatever I'm saying, that is only and only in MSME corporate debtors, because in MSME, running of the business depends upon the personal intelligence capabilities of the board of directors and key managerial personnel. If those are not with you, then it is very difficult to run MSME corporate debtor just based on the an officer or an administrator who is appointed by the court, because there is a lot of other functional capabilities that exist within the family of the promoters that would not be available to RP in CIRP, whereas in PIRP everything is available to the RP. So therefore, the CIRP as compared to PIRP for MSME, PIRP is much better. That we have already deliberated, and also based on various questions, I would still answer various questions how this PIRP is better than CIRP. The other proposal, which is the other option which is available in the country presently, is under Section 230 of the Companies Act. 230 of the Companies Act, which is called Scheme of Compromise or Arrangement. So scheme of compromise or arrangement is presently used for most of the mergers and acquisitions and demergers, and also for corporate debt restructuring. The scheme is not very popular only because the 75% voting share approval is required from each class of creditor. And there are provisions, there are judicial pronouncements that any particular class of creditors, if they are having more than 10% of the debt, they can actually they can claim that they should be considered as a separate class of creditors, and 75% of their voting also would be required. So when this SOCA starts, scheme of compromise or arrangement starts, then the different classes, may it be debentures, home buyers, may it be depositors, may it be creditors, operational creditors, government liabilities, financial creditors, unsecured financial creditors, intercorporate depositors. So they all can ask the court that we should be a separate class of creditors because of this litigation, because of all these demands. The companies are not able to get 75% consent on the scheme of compromise or arrangement, so that schemes are not getting approved. So these two are basically court supervised restructuring or resolution processes. Now, there are two more processes which are basically out of court options where there is no court involved. That is, one is the RBI Prudential Framework for Resolution of Stressed Assets, which is based on the RBI circular dated 7th June 2019. And presently that circular is mandatory for a total outstanding loan of more than 1,500 crore, but that is also open for any outstanding amount which is less than that. This particular RBI Prudential Framework for resolution of stressed asset is applicable to all those financial institution banks which are regulated by RBI. So it is not applicable to those who are not regulated by RBI, like mutual funds, like insurance companies, like others. So the lenders can be many. So, but this particular framework is only applicable to RBI controlled, monitored lenders. So the conditions of credit rating by credit rating agencies, which should be at least RP4, that is one limitation into this. The banks are not ready to sign inter-creditors agreement. That is also another limitation. So the process is not really very popular. Not many cases are getting resolved, although the banks tried to resolve this under this framework, but not many cases were resolved because there was no Section 53 benefit. Now, what is Section 53 benefit? Section 53 says that if there is a company under the financial stress and the assets of the company should be totaled up, assets of the company should be valued, and there should be two valuations. One is fair value and one is the liquidation value. Then we should see all the claims, all the liabilities of the company, and then we should start allocating the resources, assets right from the top under Section 53. Wherever the asset finishes, after that, any other creditor would not be entitled to get any amount. So in case our asset finishes only at secured creditors, so all others like employees, unsecured creditors, government liabilities, operational creditors, any other creditors, shareholders, preference shareholders, they would not be entitled to get anything as per Section 53. So once a company resolves under CIRP or PIRP, Section 53 is applicable. So any liability which is over and above the assets of the company, that would be extinguished. But that kind of facility is not there in scheme of compromise or arrangement unless it is approved by the class of creditors. That is not even applicable to RBI's prudential framework, only applicable to the participant lenders. And then the last is the informal understanding between a debtor and creditor, and that can be informal understanding between a bank, between financial institution, between NBFC and the borrower. All this presently restructuring, where we make an application to banks for deferment, for conversion of some excess borrowings into working capital term loan, for waiver of some interest, for reduction in some interest rate, for funded interest term loan, for any kind of unpaid interest, with interest or without interest. All these benefits that we are seeking from the banks, that is basically informal understanding between the lenders and the borrowers based on their internal policies, based on their internal circulars. Similarly, when the one-time settlement, see, whenever any MSME presently or any borrower or even any individual they have a default, and after the default he would like to go for one-time settlement because somehow he's been able to sell the asset or he's got the money from some other sources. So he would like to go for the one-time settlement, and that one-time settlement is also a kind of informal understanding between the debtor and creditor. So presently there is no structure for such restructuring. There is no RBI circular which is valid. The CDR has been abolished. The S4A has been abolished. All kinds of RBI circulars, RBI monitored restructuring processes has been abolished when this insolvency law came. Now the only informal structuring is available, which the banks, not all the bankers are interested to take up the proposals. Rather, in case the borrower go to bank for any restructuring, we have seen that the bank becomes a little more active for taking SurfAC action, for even taking insolvency action, and even stop any further assistance, any further help to the organization. So these are all the kind of difficulties that we have discussed: CIRP deficiencies, the scheme of compromise deficiencies, RBI challenges. So all the challenges that we have discussed, and the focus today is the kind of restructuring by the lenders and the creditors. As I said, that there is no formal structure available. Each bank is doing restructuring as per their own policy. One-time settlements are also being done based on internal board-approved policies of the bank. Other creditors are doing settlement based on their commercial wisdom and other options available. The WCTL, FITL, interest-free term loan, concession, repayment, moratorium, all this is again informal. Mostly when we go to the bank, they would ask for the promoter's contribution, and they will also ask for some additional induction of funds. They would ask for some additional collateral security or additional guarantee, corporate guarantee, personal guarantee. All these are basically negotiations between the bankers and the borrowers. Additional funds also can be given under the existing schemes of the banks, but then mostly the banks are not interested in giving good money to recover bad money. So in this restructuring, presently only the internal committees are reviewing the proposals. The formal structure is not there, no timeline. They are not under obligation to finish within a particular timeline. And most importantly, Section 53 is not able, even if I am able to take some benefits from the bank, even if I am able to take some relief, some rebate from the bank, but the other liabilities, Section 53 is not available to me.
Anil sir, sorry to disturb you. Your voice is coming very low. Right.
Is that? So is it slightly better now?
Yeah, a little better, sir.
Okay, so what can be done? I will just see. Mic, audio setting, and the test mic. Mic is already full.
अब सही है sir, I think. मतलब अगर ना हाँ.
Sir, I think if you keep mic close to your face, probably.
Yeah. No, this will help. Certainly, this will help.
Right, sir. Right.
So the most important is Section 53. That benefit is not available to the existing OTS. I will give you some examples. Like now, think of a situation that a corporate, MSME corporate debtor is having a good business, EBITDA positive, good customers, good product or services, and there is a demand in the market. But somehow, because of the past or because of some other wrong decisions, the company is over leveraged. The company is having more debt and is not able to service the debt. In that scenario, even if I settle with the bank, in the meantime, I have some market liabilities, some unsecured loans that I've taken, some of the non-compliances of the taxation, some of the non-compliance, some of the disputed or undisputed statutory liabilities, and also some kind of non-compliances or some kind of activities where some criminal activities or prosecution can also be started. May that be civil non-compliances or may that be criminal non-compliances. So in all these cases, these particular MSME corporate debtor, they would not have any remedy available. even if they find a customer, even if they find a partner, even if they find an investor, they would not be able to conclude the deal because any new person who comes from outside would be scared of the statutory liabilities, notices, would be scared of the criminal liabilities because there is no waiver. Even if there is a settlement with the bank, even if the bank gives you some discount, but there is no waiver, there is no protection from the third party notices or third party prosecutions or third party claims. However, in the case of PIRP, all that is possible, that whatever assets are there as per the valuation report, and wherever the assets finishes as per the waterfall arrangement, if it finishes at unsecured financial creditors, so all the other claimants falls a little under this, they would be they would be completely not entitled to get anything out of it. And that's similarly the one-time settlements, you can only get some rebate from the banks but not from the others. So these are some of the benefits of the restructuring. And also when the banks take up any kind of restructuring or one-time settlement, there is no comparison with the market offers. So there is no market offers which are being considered by the banks. Time taken is very high, and in that particular time, the accounts slip into deep NPA, and the bank normally starts with the provisions of SARFAESI or other provisions for enforcement of their security interest. In this one-time structure, in this one-time settlement or restructuring, also there is no open competition to the market. The market value is not assessed. There is no judicial approval, and this is these are all the benefit the things which are probably not really suitable to the any other restructuring propositions in the market. So I would only finish this one first session like the Abhishek has already told you the threshold limits of investment in plant and machinery, etc. I would only say that the registration is mandatory. Before the you have to go to Udyam registration portal, online portal, and you have to get your registration done. The portal will take the WDV as per income tax records, and the turnover also would be taken from the GST and from the income tax returns. All the existing enterprises are supposed to get their registrations. Uh, they have to update their information, and the up to 1st of July 2021, everyone should get their registration done. This is beneficial. They have to just put in every year. This information will have to be updated regarding the WDV of plant and machinery and also the uh, in tax returns. For the plant and machinery, I would like to give every professional one little update. See, now the as far income tax is concerned, there are only four heads. One is the land and building. The one is the building. The other is furniture and fixture, and the third is the plant and machinery, and fourth it may be, I think, the vessels, ships. In this plant and machinery, everything is included other than land, building, and furniture and fixture. Everything else is included in this definition of plant and machinery. Even the vehicles, trucks, buses, electrical fitting, ships, aeroplane, and also whatever is the definition of plant and machinery, including books for professionals, that also would be considered as plant and machinery, and that too WDV as per the income tax returns. However, when we go to the definition, when we go to section 8 of the MSME Act, we also found that the cost of pollution control equipment, research and development, industrial safety devices, and then because and there was a notification also in 2005 issued 2006 I believe, and issued by Ministry of Industry at that time, and that notification also says that the molds, jigs, dies, the uh, freight, all this would be even the interest capitalized, all that would be excluded from the definition of uh, plant and machinery, whereas as per the Income Tax Act all is included. So that as per the definition of MSME, that would be uh, excluded. So the other discussion that I would say that the PIRP cannot be initiated by the financial creditor or operational creditor. It can only be started by the company, MSME corporate debtor. That means it can only be started by the board of directors voluntarily, and that too after the in principle approval of the financial creditors. So once the PIRP fails, the second PIRP cannot start before the expiry of 3 years from the failure of the first PIRP. However, the banks will have other options like CIRP, like structuring, restructuring, one-time settlement. All other options would be open. If the PIRP fails, the second PIRP cannot start in the next 3 years. I think, Abhishek, in case there are any questions at this moment, we can take up the questions.
Sir, there are a couple of questions that we can take up.
Yes, please.
One, Mr. Ashish Agarwal has asked, trader is not classified as MSME, how trader is defined? So I believe, so you can.
I think simple, Abhishek, see, the manufacturing is defined and the servicing is defined. Anything which is not covered under manufacturing, processing, packing, or even providing any services, that would be considered as trading. Trading is when we are selling a product without even changing any shape of the product. Simply depacking the larger packs and doing it smaller packs, that is not considered to be manufacturing or service. See, opening a larger pack of goods and preparing a smaller packets, that also called trading.
Right, sir. Sir, one CA Lalit Maheshwari has asked, when first application of PIRP is filed with NCLT? That is his question number 1. Second, is first COC will be prior to initiation of PIRP?
I think the first question has got some ambiguity. What exactly he says? When the first application is filed? I not understand. What
Sir,
first application?
Sir, I believe once he gets to know about the base resolution plan which is prepared and then submitted to NCLT, I think this question has come before we have taken up the next topic.
Yeah, I think we'll take up the next topic, like how the application can be submitted and what all is required to submit an application. We'll take it in a simpler manner. We'll
Sir,
take
I
it
have
up
one question. Right, sir.
Yes, yes.
Sir, under IBC 2016, also under Section 10, a CD can apply itself for insolvency proceedings to be initiated. And see, one difference that I can make out is that under PIRP, the CD retains the control of the organization. So besides that, I mean, in a nutshell, can you distinguish from the perspective of MSME 5 or 4 key differences between a PIRP proceeding vis-a-vis IBC normal proceedings?
I think you are actually asking me to compare Section 10 application and PIRP.
Yes, sir.
Because the CIRP and PIRP we've been discussing. So the Section 10 application is that the IRP will take control and custody. Even if the IRP is appointed by the company, but the bankers will change the RP and will appoint the RP of their own trust. So the business would not continue to be managed and controlled by the board of directors. The board of directors will get suspended in Section 10 application, whereas in PIRP it would not be. Secondly, in case the Section 10 application fails and no resolution is achieved, then the company goes to liquidation, whereas in PIRP, in case PIRP fails, no resolution plan is approved, then the company does not go to liquidation. It only simply PIRP gets terminated and the company continues to be working as it was working. So, and the third is then the committee of creditors in that particular case would contribute for the running of the company, for keeping the company as a going concern, for RP fees, for the process expenditure. Whereas in this case, in the case of PIRP, all the costs will have to be made and incurred, and also the funds will have to be arranged by the MSME corporate debtor. So these are the three differences that broadly, as far as the coercive time, of course, the time, everything is okay. time, this is a much lesser time taking process. Section 53 is applicable to both. And so these are the primary differences that I'm saying. And the major difference that I understand is that the business gets disrupted in case of CIRP because the business is taken away from the board of directors and it is controlled by the RP and the COC. So these are the differences between Section 10 application and PIRP.
Right, sir. Sir, one question which a lot of my MSME friends have been asking for the past week, 10 days, ever since they got to know that we are organizing this webinar, is a very genuine question because a place like Jaipur and Rajasthan, we have got 80-90% of the organizations which are falling into the category of MSME.
Right.
So a normal concern in the minds of many stressed MSME segment people is that the banks have a charge over the assets of the company and the liquidation value in case of many companies of the assets is much higher. And, and adding up the personal guarantee of the promoters, the banks may not be ready to take a haircut. So, sir, on that account, would you differ from my views?
So let's take an illustration that the company has some assets and the market value and the liquidation value of those assets are more than the liabilities. Secondly, the promoters also have some assets. Promoters also have some assets, but those assets are mortgaged to the banks. When we go to banks, the bank says that the total assets, like the company's assets and the promoter's assets or the assets owned by their associate concerns are much more than our liabilities. So why should we give them any kind of waiver? We would be able to recover our entire money. So we are not interested in giving any kind of waiver. Now, when this PIRP starts, the valuation of personal assets or the assets which is not owned by the corporate debtor, that is not counted, whereas the liabilities are counted. So when I say that there are suppose 100 crores of assets are available and 100 crores of bank liabilities are available. However, out of 100 crores, 50 crore assets belongs to people other than the corporate debtor. That means my liquidation value is 50 crores and my liabilities are 100 crore. When I go to bank will say that I am not going to give you any discount. You actually have to prepare a base resolution plan which gives me the value of the entire, which gives me the value which is actually I should be able to justify in papers, and that should be I would be able to apply my commercial wisdom, and I should take the decision according to the options available. The option that I have is I will go to Surface, I will sell the properties, and I will be able to recover 90 or 80 out of the total properties. So then the promoter will say, okay, I will give you 80, but then the other people who I cannot give, then I would be able to take a rebate from other people. I would be able to protect myself from the income tax dues or GST dues or old other statutory liabilities or market liabilities or unsecured creditors, because the liquidation value of the company is much lower. So in such cases, the bank will say that it will be difficult for us to consider this because everyone will accuse us that you have given the benefit to the promoter and you have connived with the promoter that the loss may be given to the other creditors other than banks. Then the bank will say that you have to dilute your shareholding. You have to dilute your shareholding means that the promoters will have to bring any other investor, any other partner, so that they also lose control when somebody else is losing some money and also giving some haircut. The promoters also should lose some kind of control on the company. So the promoters also would be asked to bring some fresh investor, a partner, or even overall buyer. Then only they would be able to consider your resolution plan. Still, the benefits are that maybe that the banks are not agreed for any kind of haircut, but the haircuts definitely can be taken from the others, market liabilities, statutory liabilities. And if not only this, then even if everything is very good, but then corporate debtor is interested that somebody should come and buy it over. The person who is coming to buy a company, which is healthy company, assets are higher, that particular person will not buy the company unless it is run through the PIRP process, because of the freezing of the past liabilities, freezing of the past tax liabilities, freezing of the past criminal liabilities. Because of all this, this would be the safest route to acquire a company, to take over a company, to enter into partnership from in an existing company. So in India, hardly we could see any official takeover of an MSME company or an investor coming officially to an MSME company where some defaults are there. So this actually will become a process which will be much used for selling MSME businesses, adding partners to MSME businesses, adding investors to MSME businesses, because of the section 53, because of the protection from past liabilities. So this definitely would be beneficial even if assets are more. However, the assets owned by the corporate debtor will be considered and not the assets owned by all others for the purpose of PIRP. You are mute, Abhishek. Abhishek, you are mute.
Sir, one more question has come, sir.
Yes.
From one Mr. Gangaram Agarwal. Is the consent of each of the is the consent of each of the FC required, or 75% of the creditors? So I believe, sir, once we talk about base resolution plan, I believe these all will be covered.
No, it is 66% consent is required only.
Right, sir.
66% is required.
So these are the questions for till now.
Okay, so also the slide which you can see, this also deals with the priority of applications which would be dealt by the adjudicating authority. The first scenario is that any application under section 7, 9 or 10 is pending before adjudicating authority as on 4th of April 2021. So if the applications are pending and after that PIRP application is filed by the corporate debtor, then all these applications be first disposed of. 7, 9, 10, all applications will be disposed of before PIRP application is taken up. Second scenario, no application under section 7, 9 or 10 is pending as on 4th of April 21. Then there are 2-3 sub scenarios. One scenario is that the application for PIRP is filed after 4th of April 21. So the adjudicating authority will consider this application first. And after filing PIRP application, there may be any application filed under section 7, 9 or 10. Those would be disposed of after the PIRP application is disposed of. Second sub scenario, that the application is filed by someone under section 7, 9 or 10 after 4th of April, and the corporate debtor has filed PIRP application within 14 days of filing of such applications under section 7, 9, 10, then the PIRP application will have the priority and the other applications will be kept in abeyance. However, in case this PIRP is not filed within 14 days of applications under section 7, 9, 10, then the PIRP would not get that priority. Okay, so we have seen, let us talk about the eligibility. Sorry. The eligibility of the corporate debtor for while going for the PIRP. The first is that it should be an MSME, it should be registered. Although when we see the forms, there are provisions for even if the company is a new company, it is not registered. So there are provisions that you can make the application without even having the MSME registration. The default should be more than 10 lakhs of rupees. And the default can be any kind of default. It can be a default for statutory liability. It can be a default for operational liability. It can be a default for the bank. It is not required that the company should be NPA. The company has not gone into PIRP in the last 3 years. The company is presently not undergoing CIRP or liquidation, and the company is not a willful defaulter, or the company is not convicted for any offense punishable with imprisonment, and the company is also not prohibited by SEBI from trading in securities. These are the eligibility criteria. Okay, now this is a very important process that I'm going to discuss. What to do, how to start the process. How to start the process, I would actually be able to tell you in a very, very simplistic manner. As a chartered accountant, you actually have to keep watching which of your company which you are handling is under some financial stress. Even I have seen people who actually got entangled into a kind of litigation, and that may be a tax litigation, that may be litigation from any customer or any supplier, and the corporate debtor feels that this litigation will actually be very expensive for us, and in this process our company will come under financial stress in a huge manner. So the chartered accountant must handhold that MSME corporate debtor. The process would be explained by you to your companies. So what is all which is required for starting PIRP? First of all, there has to be some consultant who will understand the reasons of default, the total amount of assets, total amount of liabilities, the business operations, whether there is a possibility of revival, is there a positive EBITDA, or what exactly can be done for bringing the EBITDA to positive level. All this is the basic business decisions, that whether the company would be surviving, whether this company has a right business model. Then only we can say, yes, the business model is right, but the debt is higher. Yes, the EBITDA is there, but the EBITDA is not able to serve this kind of debt. Yes, the business is revivable. Business can be revived if some more working capital is available. Yes, the business can be revived in case some more capital investment is available. Yes, the business can be revived only if another partner is added and he brings 50 crores or 20 crores or 10 crores. Yes, the business can be revived because there is a person who actually is interested in investing in my company, but he's not investing because of the past liabilities, because of the unforeseen scenarios which will come in future. So in fact, yes, otherwise also, in case somebody is interested in selling the company, selling the running business to any other person, so then you can always recommend him that this PIRP is suitable to you. For initiating PIRP, first of all, you actually have to prepare a kind of resolution plan, base resolution plan, and you can call it in your own older language, the business plan, or you can even say the technical and economic viability study, and what all measures would be taken to revive the company, to remove the financial stress. So this is called, you can call it as a project report, restructuring plan. You can also call it as the kind of base resolution plan. So in PIRP, we are calling it as a base resolution plan, and that base resolution plan can have anything in its belly. The base resolution plan can propose haircut to secured financial creditor, unsecured financial creditors, to everyone under Section 53. It can propose haircuts to anyone. But it has to be based on the value of the assets and the total claims. The base resolution plan should also show what kind of working capital would be required for running, for reviving, what kind of capital expenditures are required, and the manner and manner of repayment or manner of servicing of the debt in future. So that means base resolution plan should have the analysis of the balance sheet, profit and loss account, should also make projections for future, how the business would be revived, what all investments are required, how much actual excess borrowings are there, how much actual working capital is presently available, what is the projected working capital requirement, how the projected working capital requirement will be achieved. So this is the process. This is a job of a consultant who understands restructuring proposals. So the first thing is that to engage with the corporate debtor, board of directors, key managerial personnel, and prepare a base resolution plan. Once that base resolution plan is prepared, and informally, you should also discuss with the bankers, with the lenders, that we are interested in PIRP and we are preparing a base resolution plan. And in base resolution plan, we would actually explain to you how the entire restructuring and how the financial viability can be achieved now. And we should also keep telling the banker that in case we would not go for PIRP, that the company is defaulting here and there, so somebody may go for CIRP. So that risk that the bank is carrying, that if the company goes into CIRP and the banks are required to make provisions of 50% of the total outstanding, the branch profitability would be dipping, the regional office profitability would dip, it will impact adversely on the bank balance sheet. So therefore, they would be interested that they should handle it with care. They would consider the business plan, base resolution plan, and they would participate into the pre-PIRP process. Now, what is pre-PIRP process? So the pre-PIRP process starts when you do the following. Number one, base resolution plan is finalized from the promoter side, from the board of directors side. Board of directors have also passed a declaration with the majority of the directors, and it means the majority of the directors have given a declaration. That means that is also a kind of a resolution in the meeting of board of directors. Then the members of the company, the shareholders of the companies also passed a special resolution regarding the PIRP to be initiated. Now, the other documents are very important, like the list of assets, liabilities, the list, the information required for the valuers, the item-wise list of creditors, including their contact details, including their invoices, including all that, so that everything is required. And when we prepare everything, and especially the list of financial creditors, then all this would be served officially to all the lenders who are my financial creditors. So first of all my financial creditors will be served with the following documents. Number one, base resolution plan as prepared by the corporate debtor, declaration by majority of directors, special resolution, the last 2 years audited balance sheet, last provisional balance sheet, which is not even older than 14 days from the PIRP commencement. So all this latest information, latest list of creditors, latest financial creditors, all that has to be submitted to the banks. Once we submit that along with the letter that we are going ahead with the PIRP, then the corporate debtor will come under an official position to invite banks, to invite all the lenders and participate into meetings which are called pre-PIRP meetings. In pre-PIRP meetings, all the financial creditors will be given notice. 5 days notice is prescribed under the regulations, and all the lenders will come in the meeting, and this will be called as the meeting of the creditors. In this meeting of the creditors, the banks are under obligation to see whether the process can be started or not. What they would see, first they would see the documentary eligibility, like MSME verification, the MSME registration, the nature of default, the amount of default, and the total list of creditors. Every creditor will see what is their ratio in the creditors, what is their voting share in this process. And then they will deliberate on the base resolution plan. So this is the first instance available with the lenders to negotiate on the base resolution plan. The lenders will say that, no, we are not agreeable to you because we still feel that the asset value is much more. You have to give us the best resolution plan. we will not approve this. So that's a negotiation which might even continue for 2 months. So this pre-PIRP period in total would run in 90 days as per the regulations. If within 90 days the no decision is taken by the bank, then the process may have to be started again. The pre-PIRP period, the pre-PIRP process, there is no limit. It can be started every 3 months. It can be started every 3 months from the date of declaration by majority of the directors. So the date one starts from the declaration by majority of the directors, and if 90 days crosses, and then we might have to start another pre-PIRP uh, before it is accepted by the financial creditors. So there can be multiple pre-PIRP processes till the time the bank doesn't agree or bank takes an alternative decision. So this process of calling the lenders in an official meeting. In that official meeting, they will discuss, they will negotiate with the corporate debtor regarding the base resolution plan. They can even ask for additional collateral security. They can even say that we would not be able to provide you additional funds. They can say anything and everything. And once once in principle approval is there, then they would provide then they would say, okay, go ahead, and they provide us in principle approval for commencement of PIRP. The moment they decide about this, then they will call for quotations for the fee and they will invite insolvency professionals to act as RP in this PIRP. So that process also will take some time. So once a particular person is selected, that person will give his consent. That insolvency professional will give his consent. So this is for the first time that after giving the consent, immediately the RP's job starts. Without even getting appointed from the CIRP, RP's job will start. So what would be that job? Now that job would be, first of all, the IP. The IP would be appointed as RP by the financial creditors. The fee would be discussed and settled by the financial creditors. The total of the fee for the entire period of PIRP would be assessed, including all expenditure. The corporate debtor will be told that this much of expenditure is required to be deposited in a separate bank account. The corporate office will open separate bank account and will authorize the RP only to operate that bank account, nobody else. So the money would be deposited in that escrow account. The committee of creditor will authorize the RP to take his fee and also the fee which is payable to other professionals and also the fee of expenditure from that particular bank account without even asking from the RP and without even asking to COC, except for the approval of the expenditure. Now the RP is appointed and the RP also will provide a report. RP is also supposed to provide a report, and that report, there is a format, and along with that format, the entire application would be submitted to adjudicating authority. Now, what that application would be? That application would be as per Form 1, as provided in the PIRP rules notified on 9th of April 2021. So based on those rules and the consent of the RP, along with that application form, the RP also has to give a report. RP will also give a report on the eligibility of the corporate debtor, other compliances, the report on the legal compliances of the base resolution plan. All that would be provided by the RP as a report to NCLT. So all these documents like the base resolution plan, the declaration, the resolution in the shareholders meeting, the list of assets, list of creditors, list of financial creditors, the balance sheets of the last 2 years, provisional balance sheets, the books of accounts for the recent period, all that will have to be attached as application with the PIRP application and will be submitted before the adjudicating authority. Now look at, in this case, the adjudicating authority would do it quickly because there is no requirement of giving notice to the other party Whereas in the case of section 9, section 7 and 9, the notice is required to be given to the other party, and also the principle of natural justice are applicable. And in case the notice is not received or not served, then the time is normally given to the corporate debtor to respond. Until the time the corporate debtor is not responding, the ex parte decisions are very difficult in the case of starting of CIRP proceedings. Now, at this particular level, the RP has been appointed by the financial creditor. The application is submitted to adjudicating authority. The business is being run by the corporate debtor board of directors. The banks have taken in principle decision on the base resolution plan. The list of creditors has already been given by the corporate debtor in a format which includes detailed information about each creditor, including their contact details, telephone number, contact person. Sorry. So at this stage, the adjudicating authority probably is not required to give notice to other parties because it's a consensual. Financial creditors have also already given their consent. The board of directors have already consented. So they would just look into the documents. They would just look into the entitlement, eligibility, and they would pass an order for commencement of PIRP and appointment of RP in this case. So now the RP is appointed. The business is being run by the board of directors. RP is monitoring the business. The RP's duties have started now. So at this level, Abhishek, is there any question? Because we are already at about 5:27.
So there are no questions posted in the chat box, but I can take up 3-4 questions which are there in my mind if you say. So like there is as you mentioned, there is a limit of 10 lakh rupees. So that is the minimum threshold. Is there a maximum threshold of a default also that one should have defaulted by, not more than that amount?
No, there is no maximum limit. Not at all. No maximum limit.
All right, sir. And sir, in case there is a CIRP proceeding that has started on a CD under section 7, 8, 9, 10. So in that case, is there any chance for him to go for a pre-package?
CIRP proceeding or CIRP application?
So somebody has filed an application, say under section 7, 8, 9.
Now, see, like the only scenario is that the PIRP application can also be moved by the CD after taking the in principle approval of the financial creditors. However, the adjudicating authority will first dispose of other applications which are filed prior to PIRP applications. And in case those 7, 9 applications are rejected, then this PIRP application would be considered.
All right.
However, in case the corporate debtor is, it is possible for him to file a PIRP application within 14 days of any application filed under section 7 or 9, then the bench will give priority to PIRP application and will keep in abeyance all the CIRP applications.
All right, sir. So, one more question that I had, like in case of a CIRP, an operational creditor can be a whistleblower and can take a CD down in case there is a default. So in case of PIRP, so that way he may get somebody down, but he stands in a priority. He does not stand in a priority list. He stands where he stands in the order of payment. So he may file an application, but he'll still get his money when his turn comes. So in case of PIRP, are the operational creditors any better placed vis-a-vis CIRP?
No, the operational creditors are not better placed. They are not part of the committee of creditors. They are not the decision makers. The total what they are getting, that what they would be getting is again based on section 53, depending upon the assets and liabilities of the company. In case the assets are not enough to cover all the liabilities, then the remaining creditors would have no entitlement to get anything under the PIRP or under the CIRP. So the operational creditors are not in a beneficial position. Rather, CIRP is much better for operational creditors because they can at least put some pressure uh, on the company. But see, even otherwise, Abhishek ji, the financial, the if their claim, if their amount is more than 1 crore, then they can still go for filing the application under section 9. Nobody stops them. But in case the PIRP starts, or in case the corporate debtor has any intention to start PIRP, then it will be more beneficial to the operational creditors to go for the CIRP application, because the corporate debtor will immediately settle him and will ask him to withdraw. So that is an additional tracking that an operational creditor can keep. If the company is going for PIRP, he should immediately file his application before the company files PIRP application, because in case his application will be a hurdle for PIRP, the promoter will settle him before anyone else is settled. That is also a strategy.
True, sir. Sir, one last question before we go on to the next topic. What if the PIRP process fails? In case one is not able to make a base resolution plan along with the bankers. So as we said, in a span of 3 years, so for the next 3 years, one cannot initiate the PIRP proceedings. So will this also be counted as one PIRP proceedings having failed? And will he not get a chance for the next 3 years? Suppose somebody fails today. Can he, discuss with the bankers and propose a plan a year later than now?
So Abhishek, there are two processes. One is pre-PIRP and one is the PIRP. Now the pre-PIRP is the discussion with the bankers and also trying to convince them that this company needs PIRP and is eligible for PIRP, and we would be offering good amount, and in case the banks are not going for PIRP, that somebody else can go for CIRP. Bank will lose more than what they are losing in PIRP. That kind of discussions will have to be taken place with the banks. However, in case the banks are not interested and the banks do not take any decision in the 90 days, then there is no impact on the corporate debtor. The corporate debtor can again start the process of 90 days immediately after this. Then again, in case the bank doesn't take any action, then again can be started. So there is no limit on the pre-PIRP process. Now it is only once the uh, pre-PIRP is over, banks have given in principle approval, the PIRP starts, NCLT order comes, and thereafter no resolution plan is approved and the PIRP is terminated, then the CD cannot go for another PIRP for 3 years.
All right,
So,
sir.
but otherwise, if the bank doesn't agree in the first 90 days, then the next 90 days can start the other day, no problem.
All right, sir. Sir, there are no further questions.
Okay, so quickly, I would deliberate about the duties of the RP. So the duties of the RPs are similar to CIRP, except for the 3 exclusions: keeping the company as a going concern, taking control and custody of the assets and the businesses of the company, and the responsibility for protection and preservation of the assets. The 3 responsibilities are not there. Otherwise, all other responsibilities are there with the RP. RP is supposed to uh, report to IBBI all these duties, all the documents. As I said, the duties before the PIRP starts. So and this is since in the meeting there most of the chartered accountants are there. So I would like to again discuss that as far as this consult, there are 2 opportunities. One is the opportunity as a chartered accountant who understands restructuring, who understands how to prepare business plans, who also understands how to uh, prepare a revival or restructuring proposal. So that's a first instance, and that is the job which mostly chartered accountants would be doing, who would also have some knowledge of PIRP structure and the CIRP structure. So even if somebody is not interested in getting appointed as RP, so the other job, which is the job of a consultant to corporate debtor, that actually is more valuable, and that is a basic documentation and strategy hand holding to the corporate debtor. So that's a first opportunity to the chartered accountants. The second opportunity is to get appointed as the resolution professional. Of course, the other opportunities like valuation of the assets and preparation of detailed documents which are required by the RP, that has to be prepared by an outside consultant, because the companies, MSME companies, would not have those kind of qualified people employed by them. So they would only outsource all this documentation and all this preparation of information in the charts, in the formats as provided by the RP. That's also a kind of so the mostly people ask me a question, how the resolution professionals will quote their fees. So as far as this first is like what should be the fee of a chartered accountant who actually is engaged with the corporate data. That of course there is no amount I cannot define, because anyone who actually would start this process will continue with the corporate data at least for to my understanding, at least for 300 days, starting from the first discussion, which is the how the resolution plan, base resolution plan will be prepared, then the entire process of negotiating with the banks, then PIRP starts, then the entire process of handling the RP. So all this is required. This is required to be done by the consultant. The second job is to be appointed as an RP for the pre-PIRP process, for the pre-PIRP, and also for the PIRP session. So there is when we quote our fee, there is one provision that I would like to discuss. There is one provision which says that in case the promoters are conducting the business in malicious manner, fraudulent manner, and the transactions are fraudulent in nature, then the COC can pass a resolution with 66% voting that the business may be taken over by RP and assets may also be taken over by the RP. So RP will quote three fees. One fee is the pre-PIRP work, where he is supposed to get a report made. He will also conduct the process of appointment of AR. He will also look into the list of creditors to find the class of creditors. All this, and he will provide a report on the various documents, whether all these documents in compliance to the base resolution plan is compliant to the legal provisions or not. So there is a separate fees for this, because in case the PIRP application is turned down by the adjudicating authority, then that fees is payable to the RP. Second is the fee for the 120 days, where he has to prepare, he has to confirm all the claims. He has to again prepare information memorandum and kind of RFRP, which is called, in PIRP it is called IFRP, means invitation for resolution plans. Then in the examination of all the resolution plans, inviting public for the resolution plans, discussing with the prospective RAs. So all this is finally completed in 120 days. However, in case the business is supposed to be taken over by the RP, then that would be a different fees, because then that will be a very different role when we take over the business of the corporate debtor. So these are the three kind of fees that has to be quoted by the RP, and the first is the consultant. And to my understanding is that in PIRP, the consultant who is engaged with the company, he will take more fees rather than the RP's fees. So this part is done. So the pre-packaged insolvency process cost is just like CIRP, so there is no difference in that. So filing of application, that also have started, like all these documents are required. The form application has to be filed in Form 1. The fee is 15,000 rupees fees to be deposited with NCLT, and it has to be electronic uploading of the form at all those benches where the electronic voting has actually been completely started, and where it is not started, then it would be the physical deposit of the application also. So like the application, when we are filing the application, there's one important part is that the list of creditors. So in PIRP, the list of creditor is provided by the corporate debtor along with their contract details, and that classification would be as a financial creditor, an operational creditor, statutory liabilities, and even the contingent liabilities. All that kind of liabilities list of claimants will be provided by the CD. The RP's duty is not to invite claims. RP's duty is to communicate with each such creditor that this is the amount that we have found in the books of account as per the CD. In case you have any objection or in case you have any reconciliation, kindly provide us. So in case the creditor come forward that yes, there is a difference in the amount or there is a difference in this and that, so that would be considered by the RP and the revised list of creditors would be made. So based on this list of creditors, the RP is supposed to make the committee of creditors. So the already we have like given you the details of all the documents required for submission of the submission of the application to NCLT. NCLT, as per the law, is supposed to take only 14 days for approval of the CIRP application. Practically it seems possible because there is no requirement of giving notice to other parties. However, the way NCLT is preoccupied nowadays and the capacity is reduced and the further capacity is being reduced according to the information, like maybe about 15 to 17 NCLT members are retiring up to mid of July. So when all these will retire, so the NCLT capacity will further be reduced, and that actually would be detrimental to the interest of IBC, to the profession of IBC, till the government appoints further members. So now we need to understand the total time requirement. Total time requirement is like total 120 days, 90 days is for the RP and the 30 days is for the NCLT. So this 120 days time, it doesn't have any provision for extension. However, when I actually went through the complete details of the process, so including the pre-PIRP process, assuming that the banks will take 60 days time and the NCLT will take 1 month time, the total time for the entire PIRP would be 240 days. So you also would probably understand what is the pressure of the job. The pressure of the job is huge. After the application is approved by the committee of by the adjudicating authority, this is a zero date, and the PIRP order is passed. The public announcement is made in 2 days. The list of claims is to be submitted by the CD to the RP within 2 days. The base resolution plan is to be submitted to the RP within 2 days. RP is to confirm to each creditor regarding their claims. That also has to be done in 2 days. So that actually shows that the lot of work the RP is supposed to be doing, that would be done between the date the application is filed to NCLT and the order is passed by NCLT. So all these things, whatever is required to be done within 2, 3, 5, 7 days, all this will have to be done by the RP before even the order for PIRP is passed. The list of creditor has to be finalized. The valuers has to be appointed within 3 days. The committee of creditors has to be done with the constitution has to be done within 7 days. The objection by the creditor has to be received within 7 days from the receipt of communication. The finalization of the information memorandum has to be done in 14 days. The COC meeting and the COC meeting also will happen in the 14 days. The first meeting would be happen within 7 days of the constitution of the COC. If there is any change required in the COC, that will happen within 2 days of that change known by the RP. The invitation for the resolution plans will be issued within 21 days. Last date of submission of the resolution plans would be 36 days. Then the RP will also have to form an opinion on the avoidance transactions under section 43, 45, 49, 50, and 66. And that should be done before 30th day from PIRP, determination of the transactions before 45th day, filing of an application before adjudicating authority before 60th day, and then submission of the resolution plan to commit after its approval, submission of resolution plan to NCLT within 90 days. So that means that within 21st day, within 21st day to 90th day, the RP is supposed to update the information memorandum, issue a public notice for invitation of resolution plan, discuss with the prospective resolution applicants about the company, then uh, receive the resolution plans, prepare detailed IFRP, then the examination of all the resolution plans, discussions with them, and then determination of bid valuation matrix, tick size. All this has to be done within this period. And after all this, if the resolution plan is approved, it has to be submitted to NCLT within 90 days of the PIRP, and the NCLT will take 30 days to approve it. So within 120 days, it would start. It would, within 120 days, the PIRP would finish. The timelines looks very ambitious, but the time which is available with the RP after his appointment and before the order of the NCLT, that time is can be used for all these things. Moratorium is applicable to PIRP except for the essential commodities. Otherwise, most of the provisions of the moratorium is applicable. The duties of the RP, I've already said that it is while I was doing this timelines, I have already discussed the duties of the RP. The powers of the RP are the same as we have seen in the CIRP, except for taking control and custody. The powers would probably be all that. So the preparation, of course, the every CD, how the CD would be prepared for PIRP, the most important that I've already discussed. Couple of things that is required to be discussed is the updated books of account, financial statements, list of assets and liabilities, and also the assessment of transactions which may be determined under section 43, 45, 49, 50, and 66. Avoidance transaction, the first such report has to be given by the CD on the assessment of transactions and avoidance transactions. This is the new thing because in CIRP, the assessment of transactions starts by the RP. In this case, assessment of transactions is started by the CD, so that the same assessment of transaction is also submitted to adjudicating authority while the approval of the resolution plan. So I think we can quickly differentiate, because I have discussed many differentiation between CIRP and PIRP. However, there are something which is missing I can discuss. One, that this is a judicial consensual process, whereas the CIRP is a completely coercive and judicial process. The approval of the financial creditors is taken before, in principle approval is taken before even PIRP starts. In PIRP, the company remains in the custody control of the board of directors. Now, in PIRP, the first right to prepare a base resolution plan stays with the board of directors. So that right is not there in the CIRP. The process is quicker. It is only 120 days plus the first 90 days. At the most, it is 240 days. There is no provision for extension. There is no concept of IRP. The RP is appointed directly as RP, so there is no process of change. However, the COC still has the power to change the RP in between. Whatever 90 days or 120 days, the COC has the power to change the RP in between. Once the PIRP application is filed, no application can be considered before disposing the PIRP application. So this is a kind of another moratorium that the PIRP application is pending before NCLT. Therefore, no other application under section 7 or 9 or 10 even can be considered by the adjudicating authority. In case the PIRP fails, the company doesn't go to liquidation. However, in case the CIRP fails, the company goes into liquidation. In PIRP, no claims are invited from the public. Rather, the details of the creditors is given by the company, and the RP is supposed to confirm individually from everyone. RP will not run the company in this case. RP will only monitor the working of the company, and also the COC can limit the powers of the board of directors. Public announcement is required to be made in 2 days. Claims, I have already discussed that the RP is supposed to take the list of creditors from the corporate debtor, and RP will communicate with each creditor that this is the amount of outstanding liability. In case there is any difference, please report back. So that person will be getting 7 days. Within 7 days, every creditor will report back to the RP that this is the kind of difference. This is the list of claims that he has to finalize. But then this section 77A says that the omission of the information or providing misleading information to RP would be considered as an offense under section 677A, and such corporate debtor or person shall be punishable with imprisonment between 3 to 5 years and the fine between 1 lakh to 1 crore or both. So these are the provisions of providing misleading information or omission of the information. Maybe it belongs to any omission of asset, omission of liabilities, giving misleading information about the committee of creditors, about the financial creditors, because the RP is doing the work based on the information provided by the corporate debtor, the board of directors. So that particular that is something which is liable to be prosecuted. This is the provisions. The promoters are supposed to be very, very responsible. They have to manage the business. They have to run this company as a going concern. They have to arrange the expenditure for the process. They will also get all approvals from the shareholders. The claim determination I've already discussed, that the claims would be determined, it will be as per the CIRP. However, the claims would not be filed. The committee of creditors functioning is also the same as in the CIRP, not much change. The related party would not have any voting rights. The concept of authorized representative is also there in case of class of creditors. However, when the RP is appointed by the financial creditors, before the application is submitted to adjudicating authority, the RP will conduct process of selection of authorized representatives and also will send the selected AR to the adjudicating authority along with the application in Form 1. So this is the authorized representative. The invitation for resolution plan is also there. The RP will invite resolution plans from public at large. The IFRP would be prepared, that is similar to the RFRP in CIRP. Since there will be bidding process, so there is a tick size process in this case is the means minimum improvement over the last bid over each bidding parameter and manner of improving a resolution plan. Again, no non-refundable deposits can be taken. So the process of RFRP, provisional list of PRAs, objections from the PRA, final list of PRAs is being removed from this process. So in case the affairs of the CD has been managed in a fraudulent manner or there is a gross mismanagement, then the committee of creditors can pass a resolution with 66% voting and the RP would be able to take over the company. And once the RP take over the company, that means that it is almost CIRP. All the powers of the RP as we get in the CIRP, that would be immediately available to RP for running the company, keeping it as a going concern, protecting and preservation of the assets. Once this is done, once this is done, because of the mismanagement, because of the fraudulent transactions, once this is done, then in case the PIRP fails, now the situation is that the PIRP started, committee of creditors and the RP actually noticed that there is a transactions in a fraudulent manner and mismanagement, and the company is actually losing a lot of value. Then the COC passes a resolution, the adjudicating authority gives the permission, the entire business is taken over by the RP, and thereafter, in case no resolution plan is approved, then the company will not go back to the board of directors. Then the company would be liquidated. So this is the only one scenario where the company also can go to liquidation in case the board of directors run the business in a fraudulent manner or in a mismanagement manner. So this is what is the order of this thing. Section 67A, which is newly inserted, that also imposes penalty up to 1 crore, and that is imposed on any officer of the corporate debtor manages the affairs with the intent to defraud the creditors of the committee or for any other fraudulent purposes on or after the PIRP. So then they will also be having a penalty provisions. Approval of the resolution plan by the committee of creditor, it is the same with 66% voting share, and the provisions of operational creditor have, I mean, you see, like that is also there. If any liquidation value is due to operational creditor, they would be offered at least that amount in the resolution plan, and that would be payable before any other financial creditor is paid. In the case of dissenting creditors, if any amount is due to the dissenting creditor, they would be paid the amount which is due to them minimum, and that too before any other amount is paid to the other financial creditors. So the resolution plan is approved. The resolution plan is having all that same contents and the same kind of features, whatever we have seen in the CIRP. Now, I think quickly I would explain the concept of base resolution plan, the significantly better resolution plan, and best resolution plan. Let us start with the base resolution plan. Base resolution plan is prepared by the board of directors, corporate debtor, and it is submitted to the financial creditor before the start of the process. Base resolution plan shall also conform to all the requirements of the requirements as we have seen in section 30 and in the regulations, and we have seen in regulation 38. Similarly, the section 54K and the relevant regulations, all those requirements has to be there in the base resolution plan. RP has to confirm that the base resolution plan is conforming to all the requirements. CD will submit the resolution plan, base resolution plan, to RP within 2 days of PIRP. The COC may provide an opportunity to the CD to revise its base resolution plan before it is accepted or invitation to the public. So now the base resolution plan is already submitted. In principle, approval is already there, but now the COC has been constituted, and before the COC, the base resolution plan can again be renegotiated. And the board of directors can be told that you need to improve the resolution plan because now we have more understanding about the company. Now we have some offers before it is accepted. The COC also can approve the base resolution plan if there is no haircut proposed for operational creditors. If there is no haircut proposed for operational creditors and it has already been approved by the financial creditors, so the COC can approve base resolution plan before, without even inviting resolution plans from the public at large. If the COC rejects the base resolution plan, then the RP would invite public or the RP will invite the resolution plans from the public at large, or in case the base resolution plan proposes any impairment to the operational creditors, then also the resolution plans are invited from public at large. Now, when all this was being discussed, this was being conceived, somebody might even have raised a question Like if the resolution plan has to be compared with the resolution plan submitted by the public, then the promoters will give, and they will always start from 1 for the value of 10, because they would see what public will offer and they will offer something better than public. So therefore, the concept of significantly better resolution plan was introduced under section 54K. The significantly, see, first of all, the COC would decide about the parameters of the evaluation matrix. As we have done the evaluation matrix in CIRP, so there would be an evaluation matrix in the PIRP also, and that would be score system. So there would be score system of each parameter as decided by the committee of creditors. And in that case, the the bank will tell the bank will tell the corporate debtor that you improve your resolution plan, and in case you should bring it to the closer to the market value, closer to the value which the market will give. The promoter says, no, this is the market value. Then the bank says that in case we receive a resolution plan which is 50% better than your resolution plan, which 50% better than the base resolution plan based on the score system, then we will not give you any opportunity to improve your resolution plan. You would lose the right of first refusal, and we will give your company to the significantly better resolution plan applicant. So this is a kind of threat to the board of directors that they have to give a resolution plan which is closer to the market value. So this will be decided by the committee of creditors. So in case the committee of creditors gets a resolution plan which is significantly better than the base resolution plan, then the committee of creditors can accept significantly better resolution plan and can reject base resolution plan without giving the promoters or without giving the board of directors any opportunity to improve. So they would lose their right of first refusal in case the market offers much better than their offer. So therefore, this concept of significantly better resolution plan. Now, in case there is no significantly better resolution plan, no resolution plan has reached that benchmark, then the other resolution plan which are received from the public at large, the COC will negotiate with them. The COC will put them on the evaluation matrix, and the scoring will be done for each resolution plan, and any resolution plan which scores the best score, which is the having best score, that resolution plan will be considered as best resolution plan. Now the best resolution plan would be competing with the base resolution plan, and the competing process is considered to be a Swiss challenge process. Although the Swiss challenge process is not mentioned in the law or the regulations, however, the process would be like Swiss challenge. It will be a technology based or Excel based process. The base resolution plan would be competing with the best resolution plan, and whosoever will win will get the company, and the company, that resolution plan would be submitted to adjudicating authority for approval. So this is the concept of base resolution plan, significantly better resolution plan, best resolution plan, and the competition between best resolution plan and the base resolution plan based on the score system, based on the technology which will be introduced in the market. And if no technology is introduced, then it may be on the Excel basis. Now, the competition can be on various parameters. Competition can be on upfront amount. It can be on the remaining amount of debt. It can be on amount of the total number of years. It can be on amount of on various other parameters which the COC may decide depending upon the preference of the COC. It depends whether the committee of creditors is consisting of home buyers, or it is consisting of the financial creditors, or it is consisting of the operational creditors. All depends upon the committee of creditors and their preferences. So this entire process is basically for finally selecting the resolution plan, which will be approved by the committee of creditors. The RP will send this resolution plan to COC, to adjudicating authority, adjudicating authority has been given 30 days to approve a resolution plan. So the regulation 44 and 45 is basically the what a resolution plan can do. So everything what a CIRP resolution plan can do, everything also can be done by the resolution plan under PIRP. The mandatory contents are the same as per regulation 38. The what measures can be taken, that is also same as regulation 37. Term of the resolution plan, management and control, the provisions of the management monitoring agency, all is here. Everything is like the resolution plan under the provisions of the operational creditors having priority in case any liquidation value is due to them, the provisions of dissenting creditors having priority over the other financial creditors in any liquidation. So all these are there. Then the approval of the resolution plan is also there, and in this approval of the resolution plan by the committee by adjudicating authority within 30 days, that's also, and there are provisions for filing an appeal also. And the vesting of the management we've already discussed. Termination of the PIRP at any stage, that can also lead to, if there is a termination of the PIRP, the company continues to run the way it is running. The COC can also decide for termination, and if within 90 days no resolution plan is submitted to adjudicating authority, the PIRP would be terminated and the company goes back to the promoters. Goes back to promoter means the company continues the way it was continuing. So the COC also has power. The COC also has power to convert the PIRP to CIRP. And once this decision is taken by the COC and application is submitted to adjudicating authority and adjudicating authority decides, then the CIRP starts. The CIRP starts from that date when the CIRP order is passed, and the entire process of the CIRP will start again. So that scenario is also there. Most of the sections, there are very sections of the nitty-gritty is, of course, very important to be seen. I think as far as the opportunities is concerned, the valuation also would be done. The valuation of the assets would be done by the two registered valuers. Now, I think, Abhishek, at the last, we can take some questions, and in case the questions would not be there, I will assume some questions which has been asked by me in the various webinars that I have done, and then I would be just dealing with those questions which has actually been coming to me off and on. You can just take up the question if there are any questions from the audience.
Sir, there are a few questions. Some bit of it you've already covered, but I'll still run through each and every question that has been asked. One has been asked by Mr. G.S. Kaushik. The day from which 90 days will be counted for filing PIRP, that is one. What is the time involved in calling of meeting of BOD stakeholders meeting IM base plan required to be completed before filing PIRP?
So the date of declaration by majority of the directors, that is the date for starting 90 days. After the preparation of the base resolution plan, there is a formality that the majority of the directors will give a declaration. So the 90 days start from that date of declaration. Okay. Then the CD will give notice for convening the meetings, pre-PIRP meetings of all the financial creditors. 5 days notice period is mentioned in the regulations. I believe the bankers will attend to these meetings. The CD will explain their difficulty and the base resolution plan. The bankers will come back with their own points, and finally they would decide, and this will be an opportunity which probably the CD would be assisted by a consultant. The consultant will, all these chartered accountants who are presently present here, they would probably be, assisting the CD in presenting the resolution plan before the financial creditors. Then the financial creditors will decide in principle, because they have to be told. I think this is one question I would again see. The question which has been asked to me is why the lenders shall allow CD to start PIRP. What are the considerations with the lenders?
No, my answer has been always like if the financial stress can be resolved, it would avoid CIRP or liquidation or SURFACE, which is more stressful, and the banks are required to create more provisions under CIRP or liquidation or SURFACE, whereas under PIRP, the banks are not required to make any provisioning as per the prudential norms of the RBI. The banks are not required to make any. This is a combination of mutual and judicial process and the committee-based approach. The individual responsibility of the officials of the bank would not be there as compared to the restructuring or one-time settlement. The banks will get complete information about the CD because the requirement of providing complete information is there. Normally, the banks struggle to get information from that company which is having some financial stress. But under this process, if nothing happens, the bank will definitely get updated information. They would actually update their risk assessment and they will take appropriate action. The CD will cooperate for forensic audits, and banks will definitely come to know whether there is any diversion or any kind of fraudulent transactions before they take any decision. There is no cost to COC. Why the bankers will say no? Bankers will say, okay, continue. There is no cost. Ultimately, they may even reject the resolution plan in case it doesn't come. Or if in the process, some better person will come, some investor comes, the resolution plan or the company survives, and there is no harm to the bank because there is nothing which the banker will lose except a little bit of time and a little bit of consideration. That otherwise there is nothing that is to be lost by the bankers. So they always have the option of rejecting the base resolution plan even after they give an approval in principle. So this is something which is, I believe the lenders also would be interested in continuing with the PIRP. Abhishek, you can take next question.
Yes, sir. Sir, there is one question from Mr. Mahesh Kumar Goel. Do civil courts have a power to grant relief under the code? Is there any time period for which the central government will supersede the board? So I believe both the
No,
answers are no.
this question is out. See, like I would say out of syllabus.
Yes, sir.
The civil courts are definitely not having any jurisdiction. The IBC is very clear that the civil courts are not having any jurisdiction. But the scenario under the judicial system of the country is that if any order is passed by any court, then you actually have an remedy to go in appeal. See, you can't have any other option because see, in case any high court gives me a stay, that or any local court gives a stay, I will have to file an appeal against that order, and there is no process that I can see. Like you may go and ask for review, but not many courts are open for reviewing their own order. But that actually takes time. As far as the jurisdiction is concerned, they have no jurisdiction.
Sir, there is one question from Lalit Maheshwari. If CD gives wrong information about section 43, 45, 50 and 66, is RP responsible for not getting the true position?
The CD definitely gives wrong information, and the section 67A is also provided for imposing penalty for misinformation. Section 77A also has been inserted for prosecution, and the RP is also supposed to, RP and the COC will also get the forensic audit done. They see, like as far as the forensic audit is concerned, there is no word forensic audit or transactional audit in the entire code or in any regulation. It is only like the professionals can be appointed. So the RPs or the COC, they would always like to have a separate forensic auditor in case the banks have not done it before. So it will be the duty of the, like even today, even if we appoint a forensic auditor, but then in case any transaction, if there is any information available with any third party, that the RP had the information of any transaction which is fraudulent and RP has not disclosed that transaction to COC and the adjudicating authority, RP would be responsible for this, even if that transaction is not reported by the forensic auditor. So the ultimate responsibility is with the RP for reporting all the transactions. he may not be able to find some because it requires an expert information and knowledge. Even the expert has not been able to unearth it. But if there is a trail that some information was available with the RP and that information was not provided to adjudicating authority regarding some transactions, that would be considered as completely non-compliant for the RP, and the disciplinary action can also be taken against the RP.
Right, sir. Sir, there are no other relevant questions pertaining to PIRP. So once we are done, I'll have one last question to ask from you. That does not.
I think that the time is also over and the people actually will get tired. I don't mind, but then I think because these are apprehensions of the lender, I actually have prepared based on my experience. I've almost done, because of course, like this is never ending. So it depends on the appetite of the participants, whether they would like to understand more about any of the processes. Otherwise, we can also conclude because it's already 6:15. We are already through 15 minutes.
Sir, I'll just like to ask one last question from the perspective of the professionals.
Yeah.
See, as we know, when we talk about the great opportunities lying for the chartered accountants becoming insolvency professionals, because so many opportunities are available in PIRP, bankruptcy also will come someday, and then insolvency also. But this also is a fact that out of say 3,200, 3,300 insolvency professionals who are there today, more than half have not even got a single assignment from the time they become members. So, sir, since we have got an opportunity to have an interaction with you, would you like to suggest some ways for the insolvency professionals approaching their clients? Because see, we hail from cities which are having a lot of MSMEs. So, do you recommend ways and means wherein once we see that there is a stress in the balance sheet of a client, and how do we propose and how do we make it better for everybody, for us and as well as for the clients, for the financial creditors? How does one make an opportunity out of it? Because see, in my batch also there were 31 people. A lot of retired bankers were also there.
Yes,
And till date, I know, sir, for the last 1.5 years, they are still looking for their first assignment.
So the first is, I think the preference to infrastructure is more by the bankers. Bankers, they would like to have an insolvency professional who is experienced and who has some infrastructure. So an association with an IPE is considered beneficial. This is number one. Number two is the engaging with the prospective customers. That may be bank, that may be advocates, and as a chartered accountant, that would be very, very important uh, in case you guide your customer, in case you guide your customers, in case you find that in their financial statements there are some outstanding debtors who are not paying, you can actually guide them that they should file an application under section 9 of the CIRP. And in case you find that the company itself is going through some kind of financial stress, then you can also guide them for the PIRP. So in case you don't have any such knowledge, you cannot actually create customer. The customer has to be created. To be very honest, the customer will not come to you. In case the customer will find somebody in the market, he will only go to popular people. But in case you suggest somebody that this is a good alternative and you provide some free consultation to some people, then you have the opportunity to back that case. So it's a, like when we started profession, so we tried to contact, like wherever we find that there is an opportunity, it's a free consultation for some time, and then you get the case. And also an association with IPE is preferred. Jaipur as such, one that the Jaipur bench, also there are a lot of cases which are pending for years in Jaipur bench. Therefore, whosoever has made any application to Jaipur bench not getting faster results. The present position I don't know. You may be knowing better. And
so it is the same.
And that also has actually kind of impacted the business at the Rajasthan level because of the cases not coming forward very fast. Even if the application is filed, the no results. Secondly, the most of the MSME, the bankers are also not doing this, not interested in CIRP because their facilities are primarily secured with the collateral securities. So they would prefer SURFACE rather than CIRP for smaller cases. I think these are the reasons which are prevailing at Jaipur level or Rajasthan level. The PIRP would be a better opportunity there rather than CIRP.
And sir, one has to actively pursue the cases, then wait for the cases to come to them.
So the cases would not come to, they would not travel to you. You have to travel to cases.
True, sir. So thank you so much for taking out time today, sir. Lastly, I'd like to invite Ankit. He was not there in the initial stages of our conversation.
Yes.
So Ankit, the branch secretary Ankit is now online with us. So Ankit, I'd like to invite you to give vote of thanks.
Thank you, Abhishek Bhaiya. It was a wonderful moderation. You maintained the interactivity of the session with all your questions. I was in the last part of the session, but I was like, every question was spot on, and the answers given by Anil sir were absolutely so relatable. At outset, I wish to place my thanks to Anil Goel ji for sparing his time for Jaipur branch and the profession. In this tough time, it is very difficult to convince people to take sessions. It is equally difficult to convince people to, be an audience of the session. But I genuinely feel that it is one of the ways to actually divert your mind. You can't constantly just think about what's happening around. Whatever effort everybody wants to do, they are doing it. Even I would want to say that Jaipur branch, through its help desk, is trying to help out members, students, even non-members to best. Today only we joined hands with CII as well as Young India and Bilal for plasma donations, for active plasma donations. So whatever, I think I request all the participants to come individually on this initiative, and together we need to fight. Stay safe, stay happy. Try to, this time will also pass by. Thank you, Anil ji. Thank you, Abhishek ji. Thank you, Akash ji, for initiating this session, and stay connected. Thank you.
Thank you so much.
Thank you very much, Ankit ji. It is actually my pleasure to be connected with it was more than 100 participants, and everybody continued till the entire session. Till last, I have seen so much of interest in the participants. So thank you, participants, for being with me. Thank you, Abhishek. Thank you, Akash ji. And I think Mr. Sharma, our senior council member, is not here now, but my thanks to him also be conveyed. And it is my pleasure because this is my way of learning. I'm learning because of this sharing, and I will continue to share my experience and knowledge with all of you. Thank you very much.
Thank you all.
Thank you all.